Understanding the draw on liquidity is arguably one of the hardest things for traders to get figured out, but once you do, I promise you it will unlock profitability. My name's Jeffrey Rodriguez, and I've been trading for the past 8 years using ICT concepts, and in this quick video, I'm going to break down exactly how I determine the draw on liquidity so you can start implementing this into your trading after you finish this video today. So one of the first things that you need to consider whenever you're trying to determine the draw on liquidity is what is your daily bias. So a very simple strategy for this is just looking at the daily time frame, which is just going to give you the overall context of where the market is likely to go next. So as an example, if we go ahead and plot this low here, we know there's resting sell side liquidity below it. And then if we go ahead and plot the high right here, we know there's resting buy side liquidity above this as well. So basically we're in a range, right? We have this low and this high. One of the things that I like to do to determine the next draw on liquidity is simply just draw a fib from the range high to the range low, and then that's going to give you the overall premium and discount within the current trading range. So let's say, for example, that we do a quick bar replay and we're looking at this day here. So when we're at this point in time, you can see that price has just come back down to equilibrium. So we don't necessarily know, is it going to go higher or lower, but simply just based on the context that the fact that we touched the 50% level and started trading higher, at this point in time, I would be looking for another run above buy side before looking for a run on sell side. Now, once this happens and this daily candle closes below the 50% level, my eye immediately switches to look for the sell side liquidity. So how I would use this and internalize this is basically go into the lower time frames. For example, if we drop down to a 1 hour time frame, we can see that I'm going to have to make sure that my fib is showing on all time frames. So let me just do that now. And we'll pop down to a lower time frame. Okay, perfect. So you can see here we've got our buy side liquidity, we've got our sell side liquidity level, and the blue line in between is going to be the equilibrium of that overall price range. So now what we could be looking for is reasons to basically justify an entry looking for lower prices into the sell side liquidity at 19,728. So again, I typically go down to as low as a 5-minute time frame. Now that may not work for you guys. You may want to just stick to an hourly or a 15-minute time frame. But one of the easiest things to do is just determine, number one, your daily bias. Is it going to go higher or lower? Just a very simple question that you ask yourself. Is this day going to close bullish or bearish? And ultimately, when you know that information, you can drop into these lower time frames, for example, like a 5-minute chart. But obviously you want to make sure that the scope of your trades are within obviously a reasonable time. So I'm just going to go ahead and plot a line on the 9:30 a.m. open on the next day, which we can get right here. And then we'll just basically speed up until we get to that point. So let me just quickly play this. And we'll run through this and I'll basically show you guys the example of how we can look for these setups on a lower time frame when we understand and know the overall daily bias. So we're just going to let the market continue to play out. Once we get to 9:30, I'll pause it and then we'll drop into a lower time frame and we're going to look for our setup. All right, so now I'm going to go ahead and remove this line because we know that we are basically approaching 9:30. And one of the things that we want to first notice is we've come up and we've left equal highs. Now, most of the time the market is going to want to seek the liquidity above these smooth highs or the equal highs. So I don't love that about potentially looking to sell this. Now, my eye immediately goes to this fair value gap here. That's a premium fair value gap. The only downside with this particular fair value gap is we do have equal highs above us. But if price offers the ability to trade back into that, that would be our setup. Now you can see here, it never traded back up into that. However, we do have another fair value gap that formed right here. And we could use that the same way as we would use this premium fair value gap here. Now, the only thing I would do different with this fair value gap over this fair value gap is I would use lower size because we're ultimately in a discount of the range. So it's still a valid short if you're selling it here. But ultimately, this is the better short because it's in a deeper premium. So when price comes back in there, I would, for example, just take a sell and then let the market plan out. We would basically be holding it for the sell side liquidity down here at 19,728. But one of the main things that we want to internalize is we have just ran sell side liquidity on a lower time frame as well. So for me, the way that I personally trade is at this point in time, I would close some partials and I would also trail my stop and profit and lock in a few $100, right? Okay, so stop loss locked in profit. Now I would hold the runner ultimately for the lows. So let's see if we get a move down there. Obviously, this is hindsight, so we know that we got down there because of the fact that that is where the daily candle closed. So we'll just continue scrubbing forward until we hit our target or we get stopped. And you can notice we come all the way back up, have a deep retracement. And let's see, it looks like we're consolidating around that level where the old sell side liquidity pool was. And we're going into the overnight session, so you guys can see we are literally just chopping sideways here. And ultimately, I could just speed this up, really. So we'll see. Let's see. Do we get stopped out in profit, or do we hit our target first? I believe it's just going to go to the target rather than go to the stop because we're pretty safe up there. So we just continue to chop around, and then we hit the target. So you could see where we'd want to close partials, and then our full target got hit. So when it comes to understanding what the draw on liquidity is, one of the main things that you want to be doing is just mapping out your range. Make sure that you're looking at the daily chart first. You want to determine what is your most recent high, most recent low, and then ultimately you can run your fib from top to bottom. That'll give you your premium and discount, and then you can work into the lower time frame so you can determine which side of liquidity is going to be ran first, and that's ultimately going to help you be able to get in sync with the market and make sure that you're taking good trades. So if you guys like this video, drop a like and drop a comment below if you have any questions. And as always, if you found value from this, drop a subscribe so that way I continue to make more videos. So see you in the next one.